pretty interesting day. We've had a few different things going on. Obviously, it's first of the month. We've also had Eurex shutting, as in can't open for some reason. And I do believe, and someone correct me on this if I am wrong here, that this happened at the beginning of April as well. First day of the month, Eurex shut at around about 7-8 o'clock in the morning. So just something to be watching out for beginning of next month there. I don't know what they're doing, why that's happening, but something just to be aware of for next month. So just keep that in the backs of your mind. Small little pattern recognition, not a pattern that you're necessarily really looking for though. Right, so onwards. News-wise, we have had ADP unemployment, so precursor to payrolls, lower number, 2.3 million. Not ideal, so we're not seeing the positive side there. This in fact caused absolutely no reaction at all. I'll show you a 1 minute chart in a bit of a couple of different markets and you'll see zero impact of this number. ISM figures though, much bigger. And this then it created some volatility, and ultimately once equities have put in their direction, it provided a bit of volatility to keep a move going, a move that essentially by that point was pretty much done anyway. So moving on, what's gone on compared to what we were looking at this morning? Cable, as I suggested this morning, after the strength of yesterday, looked like it had got the ability to move higher. We've been sitting in this longer term wedge that's been sort of in play for the last sort of month or so. I say month, yeah, pretty much all throughout June. We're in this wedge to the downside. That wedge starting off at around about 128, and we recently just bottomed and sort of effectively double bottomed down at 122.60. Former base rally yesterday, putting this double distribution, all looking good to the upside. It's now a case of, can we find more buyers on the day? And the answer was yes. The key bit here was to recognize that until you got below VPOC and into these single prints, a play to the upside was always on. It was just finding your way into the trade. That was the tricky part of today, because the cable initially didn't seem to want to do it. We got signs. We got the break of 09. We got the break of 95s for the trend, which then broke 09 and reverses all the way back. So it made it very difficult to get into this move initially. But once the day starts going, once sort of the action, particularly in the afternoon from the euro comes in, then we do get this trend on. And really that didn't come until sort of 2 o'clock session. So quite a bit of time you had to wait until this actually came and played. But the trade was always there. It was just a case of waiting and finding your access to that trade. Once we got through trend, the move towards the upside's on. It's just a case you then got to find your way into that trade. Unfortunately, this was one that took its time and took sort of really a couple of goes to be able to really genuinely get onto this trade. Now, like I say, your cue came from the euro. And as I said this morning, that because that euro weakness that we saw yesterday, that was what was needed just to release, to let the pound go. Pound was clearly showing some strength against the dollar, so we needed a bit of dollar weakness, a bit of the euro then release into the upside. Once that happens, then you can see the pound movement as well. Now the caution and what you needed to be very aware of this morning or throughout today was, as I said, that euro had got a very, very flat value area. So this flat value area is then suggesting to you that we're going to spend some time filling this in. It's a poor value area trade. So we're expecting it to hold the top of value, which it does. That's this little move up just here at the beginning of the European session. We rotate back down value. And then you get this false break. And as I said, we needed to see energy come in if we were going to break below 12.10. You needed to see energy really pick up on that move. And if it didn't happen, this was a further sign that we couldn't get that move to the downside and a reason to then start thinking about a potential reversal move to the upside. So in fact, the main move in the pound actually begins with the euro re-entering value. So as the euro starts to come back in at around about 1 o'clock, so just after those ADP numbers. As you start coming back inside value from yesterday, this now gives the opportunity for the rally. It's clearly showing a false break lower, so indicating that we don't have the ability to go down. We've now got the rally on. We get a sweep through value, and that's then what carries pound with it. The pound was already on its way up. It just needed something to let it go, and it was almost as if the euro was sort of a weight on a balloon. And as soon as that weight was taken off the balloon, the pound floated up. Euro moves straight away back through range, breaks highs. Nowhere near as dramatic as the pound, which is way through yesterday's highs and has gone back and filled that range in all the way up towards 24.80. So onwards from currencies, and we'll go on to Euro stocks. Now the difficulty that we had with equities, well, European markets in fact on Eurex, was that they all shut. We had this shut from around about 7:45 to around about 10:30, and we couldn't do anything with it. What was interesting is that, and we'll talk about this a bit more in top trades, correlation wise it all seemed to play out. Going into the shut, which you obviously didn't know about, Euro stocks was on its way up, Bund was on its way down, Euro stocks then gapped up, continuing the movement, Bund then gapped down, or well, gap open pretty much where it closed, so all looking pretty good there. What was then interesting is Euro stocks completely ignored that move. We got up into this area where it's been rejected from numerous times, where I suggested we got tails the last few days, and you see it once more. Doesn't fancy it above 32.27, and this then creates this large rush to the downside, a kind of liquidation move all the way through range. So we sweep range once again down to hold 91.92. This has been a level that we've held multiple times going back to the middle of last week as well. That was the poor lows that we broke on the big move down last week. We've gone back there, we've held that level once more, and now we're breaking through it once again. So we shoot through it, and excuse me, initially this all made sense, and it was almost as if what you had was a technical play in equities that was completely separate from bonds. And I'll talk about this more when we look at correlation and how you could be doubtful of this Euro stocks move, and how it did then present a trade later on in the day. So what we got is we get this early sweep down. This is what we were considering, that as soon as you get through this VPOC from the morning, if you come out at the bottom of value, this is a very balanced day with a bad low and a tail top. That's an indication we can move to the downside. So a break back into value or holding inside value, a move out of value sets you up for 92, and then a breakdown further through range down towards the lows that we had on Monday, which is just what we managed to do. So we achieved that move, and it does it. If you go back and look at the 24th profile, so I think that was last Wednesday, the way it traded down was extremely similar. Fast drop, small consolidation, drop again, uses that to then spend a fair bit of time consolidating. This is on a 15-minute chart. Spends a fair bit of time consolidating. So sorry, not 15-minute, 5-minute chart. Bit of time consolidating, and then we get a second rush down. Very, very similar to the move down that we saw last week. So understanding the nature of that move down, and in fact it was Wednesday last week, so I talked about it in the mentored session. Recognizing that pattern, again, allowed you into this trade. It was then a case of finding your entry, using the low volume points to find your entry, then for this continuation towards the downside. And I'll talk about the reversal a little bit more in a little while. Now the Bund almost did an identical move to the Euro stocks, and this is exactly where that questioning of the correlation comes in. It doesn't seem to stack up that you get the bonds and equities collapsing together, and it was almost as if they were a mirror image of each other to start with. Very, very quick drops. Very fast drop, and then it was the Bund that then continued this move towards the downside. So where the equities then did start to turn around, the Bunds were having none of it. So by the time the equities started to turn, you were having the Bunds down to where it was sort of 173, 175.53. They've then continued on all the way down to recent lows. First areas we were looking at today though was really if you couldn't get inside yesterday's range, we then got scoped down towards 85, 83 area, and then this whole range here to trade through, which is exactly what we've managed to do. So your opportunities were there. Once you got the reopen and the inability to get back into range, so to get back above the reopen, we then got the chance of the move down. You break the 86 and 83 single prints, so this was the last chance for buyers to come in and hold this up. They don't manage it, and then you get this complete wash through range, and we're now starting to see perhaps just a fill in of this low volume area here. So if we can get above 45, this is then the possible fill in for the rest of the day down here. Now, like I say, this was all about correlation today. It was all about recognizing that something was up, and I've talked about this before on debriefs. Something's up, and you've then got to try and work out what is up. So what I mean by this is from 10:30, so this is 10:30 all the way down to around here is around about 120. So that's the equivalent of, there's the 10:30, and then you get 120 comes in at around about here in the Bund. So what's going on here is you're seeing a straight line sell off in Bunds pretty much, and a straight line sell off in, and this is DAX rather than Euro stocks. Now this should immediately be ringing alarm bells. It should be suggesting to you that something's up. It's not often that you get bonds and equities correlating very closely together, particularly without the advent of any news. And that's what we had today. There was no distinct news. We got the Eurex reopen at 10:30. Nothing absolutely crystal clear on that as to why we should then be seeing both stocks and bonds collapsing. Yet they both did. And this should be making you think, well, one of these is probably wrong. You do get one quite clear clue on this, and one opportunity to recognize which is wrong beforehand. But ultimately, the main thought you should be going through here is one of them is likely to show a reversal pattern. Now, both fall with increasing delta, so both have got a potential delta reversal on. It's then about finding an access point to this and using other information to give you a clue. So the Bund, once you're seeing this delta reversal, i.e. delta going higher as the market falls, you're then looking for an opportunity to break this trend for a move towards the upside. It never comes. The DAX, on the other hand, puts the drop in, and all the way down, delta is drifting higher, and then puts in this pennant at the lows. This is a chance for a continuation. The difficulty here is, in particular, the S&P. Bear in mind that the DAX at this point had gone way through the previous day's lows, whereas the S&P had only just re-entered the top of the previous day's range. So if we move on to an S&P chart, the DAX was the equivalent of breaking through these lows down here. The S&P had just about managed to get inside value. So this is telling you something. This is suggesting to you that it's perhaps the equities that have got this wrong, and in particular the European equities. The S&P doesn't seem to want to go down. The Bund does. The T-notes continue to move towards the downside. So bond markets seem to be stacking up. T-note and Bund moving down. DAX moving down. Euro stocks moving down. S&P not. This would be an indication that perhaps people are a little bit trapped here, and this sell-off is perhaps slightly unnecessary. It does not mean though that you can just buy it. You've got to still find a way into the trade. You've got to find some entry point to get into this trade, and that's the real key part of this trade, finding that entry point. But ultimately the clues are there, so you're now looking for your potential access, and we get two opportunities to take this. Within this pennant, what you start to see is we find an initial low down at 12.097. We break, bounce back, and try and hold below, and this is what I call a switch trade. That within this pennant, you've actually got quite a clear level where the market is broken, failed to stay below, broken again, held, so got more people trying to play for the breakdown, failed to stay below. We come back to it. This then gives you a passive entry point. Manage your risk on this though. Be aware of your risk and think about framing your risk in terms of what are you trying to get out of this trade and where's your risk on it. This is 97. The low of this range is around about 85. So that's your risk. That doesn't necessarily seem particularly nice. You're taking around about 15 to 20 ticks worth of risk. Not a nice amount of risk to be taken. But what are you looking for on this? Initially, you're looking all the way back up to 71 because that was yesterday's low. That was this little consolidation area up here. Then you've got VWAP, and then you potentially got the move all the way to the point where we broke down from this morning, taking you all the way back towards 12,220. So you've got a potential of about 125 tick move on. Now all of a sudden, framing that against a risk and a 20 tick risk for a 125 tick potential winner starts to make a fair bit of sense. So let's bring the ladders in and you can start to see how this move starts to play out. So what I've got here is I've got the DAX and the Bund. Remember, these were the two that we were looking for. Now, at this point where we're trading, we've been down towards 96 and we're now trading post ADP in this small range here, which is essentially around about double O's up towards 10. So if you've got in at 96, what you need to see now is it needs to break 10. If it doesn't break 10, you're not right on this trade. So the way you have to think about this is until it breaks 10, you could still potentially get stopped out on this. Once it breaks 10, then you can start thinking about the possibility of continuation. The possibility of then adding on the break of trend and on the break of 33. So that's the bit that we're now looking for. Bund at this point is just having a little bit of a drift towards the downside. So we're looking all right for this more normal type of correlation. By now, we're still seeing Bund's down at his low and DAX actually opening up the possibility of a reversal. You've got 30 lot up at 10 to be a potential area to try and break through. And what you're looking for is some kind of change in the way the market starts to trade. At this point, we're not really seeing anything in particular. Volumes have got quite light, or certainly liquidity's got quite low here. Volume's quite high for the day, but liquidity is getting quite low. So we're now looking, DAX now up towards 10, and there's the break. So we get the break at 10. Do you get a chance of this coming back? Not really, but you can get in. It's still holding just above 10, so you pay up 3 ticks. The Bund's still unmoved at this point. And we're now looking for this continuation. So we've still got 10s available. And as long as we're not getting below 10, this is now the point where, particularly if you're in from 96, you're now thinking, okay, 33 is the next area that I'm interested in. If we break 33, then the pennant is gone. So the pennant breaks at 27. These highs are 33. If you break 33, you can now say to yourself, okay, if I'm long at 96, the worst outcome I'm going to get is perhaps a stop out at 20. Coming back inside the pennant, you're on a 25 tick winner as a worst case scenario. But that's not a reason to get out. This is then a reason to think, okay, that's my worst case scenario. What am I really playing for here? 70 is the main target. So once this breaks, you then have to say to yourself, okay, above 33, out of this pennant, I'm going to now try and hold on to this for 70. And yes, it could be quite galling if it trades 50 and comes all the way back to you. You're still taking a winner out of it. You've still got a decent risk reward compared to your initial trade. But what you've got to accept is a willingness to take that risk that you may lose unrealized P&L for the possibility. And what you've got to recognize is people are stuck short now. People have been selling this when nothing else is going with it in this pennant looking for continuation. At some point, there's a possibility you're going to see a stop out of these traders. And when you get that, there's your chance to exit the trade. That's what you're looking for. So until you see this rush to the upside, which we do get at around about 80, sorry, just as you break above 70, you get this rush up towards 90, and then you get this final flush higher, and that's then your sort of final liquidation of the movement. So that's what you're really looking for. But at this point, we're seeing unmoved Bund. We're just getting towards the top of the pennant, and we're now just coming for the break. So as soon as you get through 33 is what I call the trigger point. That's the point where you can start saying to yourself, yeah, this move is on. Then you play the break on it. Then you can move your stop perhaps down towards 20. Oops, fat finger the out. Move your stop down towards 20. And you can then try and hold on to this move. So just now re-entered around 29. As long as you're staying above the top of the flag at 25, we're looking all good, and we'll see it just now. We'll break 33 and you then start to get this pop towards the upside. There we go, once again up towards 33. That's your chance then to add on. We stick above 33 and you then get a further push up towards the mid 40s. So that's what you're looking for on this trade, and all this came about by checking those correlations and starting just to question yourself. There we go, 45 trades. Start to question, well, something doesn't stack up here. You don't usually see bonds and equities move together without news. The S&P isn't joining in the move either, so it's purely a Eurex equity move down. Potentially trap positioning, potentially just pure technical move, but a reason then to want to be trying to get out of, or to be trying to play the reversal in the equity markets. Right, last thing to go and have a look at. At the same time as all of this, we did see some dollar weakness, and as you got this dollar weakness, you then got this gold weakness as well. So we get this big gold weakness. Now initially, this is play of the week, remember, we were looking for continuation for this to be a flag break in the overnight session and continuation higher, and we start to see it. This then was the point that you needed to see us stay above 1796. We drop below and hold 87, and this at this point is a very last chance for buyers. It could potentially be a fill-in of this double distribution, but it doesn't happen. We start to fill it in, and this, you're just going to get people still thinking we've got a last chance here, last chance here. Once you get below 87 though, below the double distribution, back into this smaller range from Monday, we then sweep the entirety of these 2 days, the entirety of this range, and we're now looking at, once again, a move all the way through last week's range. So play of the week for a second week in a row is off. It looked good, it looked like it was there, and has now failed that. And so we're now back to the drawing board on this gold trade to the upside. It's given us opportunities. Both times this, on both plays of the week, you could have got in and then ended up getting caught out as on a trail back. So not necessarily losing weeks, but neither have then gone and progressed onwards to their bigger targets. On that note, I will wrap it up there, guys. Have a very good rest of your evening. Usual place if you do want to get in touch, info at Axia Futures. Message me if you want anything from me to cover in any mentor session. I'll leave you to it, guys. Have a very good rest of your day's trading.